Good morning, traders, and welcome to the morning update on Monday, the 28th of November. My name is Mark Owen, and we're going to take a look at the news and current opportunities that may be presenting themselves today. Okay, so first and foremost, what news do we have coming up today? Well, at 2 p.m. we've got the ECB President Mario Draghi speaking, and he's due to testify about the ECB's perspective on economic and monetary policy developments and the consequences of Brexit before the European Parliament's committee. Okay, so what can we expect from this today? Well, obviously the dollar has been on an absolute steam train for the last few weeks. So has Mr. Draghi's work been done by the strength of the dollar, or is he going to add to it and talk about further quantitative easing? We really don't know what's going to come of this as yet, but all attention should be focusing on the euro today. There's no other major news coming out today, so it is a time to sit and wait, because we've got a couple of very key interesting levels and areas to pay attention to on the charts, which we're just going to have a look at right now. So if we look at the dollar index, we've dropped down to a smaller time frame right now, because on a daily chart you actually can't see anything apart from one straight line going up. So we've dropped down to a 4 hour to see what's potentially happening. Now, everyone's saying, is the correction about to happen on the dollar index? Well, if we look at the 4 hour chart, what we can still see is a clear uptrend. And in simple terms of an uptrend, we're just talking about higher highs, higher lows. For the trend to finish, we need to see a lower high and a lower low. So what's going to happen is we're potentially seeing this market stall around previous structure here and here. We may see it push up again before it drops off, or we're going to see the continue of the dollar strength surge through. So for my own personal trading, I'm not actually going to be trading the correction in the dollar index until I see a close below 100.5, and then we may look at trading what you may call a head and shoulders pattern completion, and we'll be looking to trade it into this sort of area, maybe 99 before we then continue to see the dollar strength. So that's how I'm going to look at the dollar index. If we look at the euro dollar, we can see it's not the cleanest of channels, but it is relatively clean. We can see 1, 2, 3, 4, 5, 6 clean touches. The 7th breaks through but fails to close above. And then if we look at the support line, we've got 1, 2, 3, 4, a few touches through here, again here, then we get a breakthrough. Now we've got a pullback and retest. So what will be interesting here is when Draghi speaks, we're going to see this continuation, this retest here hold, or we're going to see a push back up into the channel and structure lows over here. So a bit of a deeper retracement might be nice. If we do see the market pull back up into this area here, if we go back one slide, we'll probably see the dollar index break through something like this. So always do your correlation with the dollar index. On to the next slide, we're looking at dollar yen. Now, if we look, all the dollar yen and euro dollar have done similar things. They've come into structure low or structure high in this case. Market's come down and is testing, and it's had a reaction off this level. So the question is now, what do we see next? Depending on your trade entry and rules, then we'll be looking for long trades only dollar yen. Now there'll be ways of taking advantage of this particular move, but you're going to have to do it according to your rules. Protege guys will be looking at the smaller time frames, and we'll be looking to get long quite aggressively and managing this on an intraday basis, taking some profits out and leaving some in for the bigger move. The S&P is moving on, setting new highs. So very simple, we're a buyer of the S&P. Next thing is where we buy from. So we'll be just looking left, look at our structure here is giving us a clue, anywhere between that 2190 and 2205 will be a key area for us to be getting long the S&P. Other than that, we'll be sitting on the sidelines waiting for the market to pull back. Now, an alternative market to currency and the indexes, will be looking at gold. So we're looking at the risk on, risk off scenario. So if the S&P is going to fall back, we should see a rally in gold as we see a decline in the dollar index. So anything in and around the 1200 area should give us a nice opportunity to sell gold. Watch for price action because it is only a shallow retracement. If we do rally up into the 1250 area, that's going to be a nice retracement to get short gold again. Okay, I think that's the charts for today. Any other particular charts of interest out there, please drop us an email to mark@phoenixblue.co.uk. We are going to be trading the markets for the next couple of weeks, where we will be easing off on our positions. Reason for this is liquidity is going to dry up a little bit, people are going on holiday, and the Christmas season is generally a bit like August. Obviously you've got the holiday season, but it's a time where new trends can start because of low liquidity in the market, so it's a time to be careful. So that's it from Phoenix Blue today. I hope you've enjoyed the morning update. If you do have any questions or want to get in contact with us about trading, feel free to do so on mark@phoenixblue.co.uk. Thank you. Bye.